If you come inside the Bloomberg, this is forward's earnings estimates. It's normalized as of the end of January, and it shows exactly what you're seeing. Like discretionary and technology estimates for this year continue to hold up, whereas its materials and its energy and its industrials just totally take a bite. Now, Evan, it seems like you think that's going to wind up rebounding, and Leigh, it seems like you're more skeptical.
Probably not, but here's the wild card. The Tesla, what is SPCE, the Virgin Galactic or whatever, there is a mania going on right now in tech. Everything is stretched, like really, really stretched, because all the money is just flooded in, right? It's the place to make money right now. At some point, those multiples just are going to be too high.
Is it?
Yeah, at some point.
Some point?
Look,
I mean,
the momentum trade reverts on a regular basis, and momentum traders get crushed every 9 to, 16 months, whatever. It happens. We've seen it happen. I've watched hedge fund friends just get run over by that trade after making a whole bunch of money on the way up. And at this point, when you see Tesla doing what it's doing and some of these other stocks and a lot of the names that I really like have just gone parabolic, it's time to sit there and say, I don't know if I want that much exposure to this. And if the coronavirus eventually hits kind of Main Street businesses, those enterprise tech businesses, you tick down that revenue growth rate just a little bit, and the impact to the multiple is going to be really high.
And that's kind of what you want? And I say want because like that would be good for your cyclical / value trade.
I suppose so. I mean, I think in the end, what we're watching is bond yields, right? As soon as the market feels that we've passed this coronavirus, the worst of it, bond yields will rise, and that usually is what triggers these big rotations, which Leigh is mentioning. So we would like to see that, and that would be a big tailwind for the cyclical trade.
But I guess we were talking about this in the previous segment, that when you continue, though, to have monetary or fiscal stimulus in there, that would argue that you wouldn't see a crash in Tesla. Like, you wouldn't see a crash in Virgin Galactic because you're not going to get any pickup in the 10 years, so let's go buy Tesla.
So I continue to believe that we're not going to see bond yields rise anytime soon, mostly just because of demographics, right? You don't have, like, we've basically cut off immigration to the country. There's no reason to believe that we're going to get a commodity shock anytime soon here. Like, where's the inflation coming from? I don't think that's the major driver of the mania in some of these names.
You don't? Okay. What do you think it is?
Well, I mean, Tesla was a short squeeze coupled with a tech kind of, just all the money flowing into tech in a one-way trade on momentum versus value. And some of these other things that are going on, the Virgin Galactic with what's going on Reddit right now is, there are idiosyncratic issues to it. But look, when you see at the end of a big rally these things happening, yes, it's liquidity driven for sure, but it's also, it's part of a broader beta kind of trade. Like there's factors at play here.